Stocks take a dive following a sell-off in the US equities overnight as macro concerns rise. Metals and auto are the biggest drags along with realties. The mid-caps fare a tad better.
Tata Motors tops expectations on CV and the JLR businesses, but PVs or passenger vehicles are a drag and the outlook for domestic sales remains muted. Stock slides even as analysts remain upbeat on the medium-term outlook. Board also approves the split of the CV and PV businesses.
Zomato fires on all cylinders with strong profitable growth in food delivery, faster ramp-up of Blinkit with an eye on profitability and the planned launch of Going Out app District.
Ola Electric launches its over 6,000 crore IPO comprising of a fresh issue of 5,500 crores and an offer for sale that will see the founder and key investors trim their stake. Growth, sustainability and profitability remain the key questions on investors' minds.
Hello and welcome. You're watching us here on Halftime Report. Good afternoon. I'm Mangla Malu. With me, Ekta Batra. Yesterday, same time, the Nifty, we're looking at it at 25,000. And as we have it, it's down about 220 points. That's the nature of the markets. But we're down. One wouldn't say we're out because, one, we haven't fallen below the 1% mark on the frontline index. The Nifty Bank has staged an important recovery led by HDFC Bank. And if you look at the broader markets as well, while the mid-cap index is down about 0.75%, we still have, advances increasing as against declines. So we have, the lines, the crisscross lines coming up for you, narrowing with each other. The question is, where do we go from here over the next week as we do have a lot of triggers to track? Hi.
Hi, Manglam. Yes, absolutely. You're talking about triggers. We have the non-farm payrolls data from the US, factory orders data, which will now become crucial only because there are fears of that macro slowdown which is dominating. So that would be important to talk about. But nonetheless, the markets are sluggish following that global weakness, but have recovered from the day's low. So the Nifty is up around 71 odd points from the day's low, which was at around 7,223. But otherwise, there's broad-based weakness across. So there's autos, metals, IT stocks, all of them sulking in today's trading session. But there are a couple of pockets of sunshine today. So, for example, Zomato, which delivered on all indices. So Zomato is in focus. Info Edge is buzzing. Newland Labs also is doing well in today's trading session. So it's seeing follow-on buying. And obviously, there's all eyes on the primary market with Ola Electric, the IPO opening. I think the street will want to see the subscription figures on this one and what it does in the auto space. But nonetheless, we have a company on our radar.
Yes, we do. You spoke about the Ola Electric IPO, Zomato. The other IPO that did extremely well was Latravenius Tech, Ixigo, as we know it, the company that is an online travel aggregator. And it's doing well in today's trading session, but if you pull up a longer-term chart, over the last couple of months or so, ever since its listing, it's been a big mover on the way up itself. And the results have shown improvement as well. So in the last 1 month, it's up 10%. If you look at it over the last 2-3 months, ever since the IPO, it's been a big mover. The EBITDA for the company improved by 67%, margins closing in towards that double-digit mark. And it was a segment which was, it was a performance which was led by all segments, but most notably the flight segment, which has seen a near 38% growth out there as well. We do have with us the group CEO of the company joining in. Thanks a lot for joining in. The first question obviously is, what is your overall bookings target for this year? And if you could break that up across all segments, because you are the market leader in rail, but at the same time, you're also seeding new vectors of growth, including the likes of flight, etc. So if you could give us an overall target for bookings for this year, along with what kind of growth you're expecting across all the segments.
Yeah, I think, we should look at the bigger picture on Ixigo's trajectory. We are the largest travel app when it comes to next billion users in the country, which means people coming from tier 2, 3, 4 towns, as well as the aspiring middle class in tier 1 towns, which is a result of, our dominance on the rail side, where we are the largest OTA. What we've been doing consciously over the last few years is essentially seeing how we could leverage our large user base to cross-sell, upsell more of other services, including flights, hotels, and buses, right? So if you look at our trajectory, not just this quarter's result, but also last quarter, you will see that flights has been growing at way faster than the market because of some conscious efforts we are making to make our users more aware about the fact that we do have these offerings, and also the product, where we have innovated and launched some new features such as Flight Tracker Pro and Ixigo Assured, which have taken up fairly well in terms of usage. And we are seeing that also now starting to flow in the contribution margin side. So I think we have the ability to continue growing faster than the market for the foreseeable future on the flight side, where we are starting from mid-single digit, sort of market share. And I think our aspiration is to move to a double-digit market share, over the medium term there.
Can you share your exact market share and what your aspirational market share would be for all of the segments?
So on the train side, where we are the market leader, we have more than 50%, close to 55% of train bookings that are done by third parties. That means done outside of IRCTC in the B2C domain. We are doing 55% of those. And on flights, our market share would be somewhere between 5 to 6% of the overall air OTA market. And on the bus side, we are at close to 13% market share on the bus OTA market, where again, we are the second largest player and one of the fast growing ones.
Right. What about buses? We understand cross-selling and upselling when it comes to flights, etc. Buses, it's a very high margin business. I mean, I'm looking at the EBIT margins here. It's close to around 74% in the first quarter itself. What is this model that allows you to have such kind of margins? And at what rate is this likely to grow going forward?
Yeah, so the contribution margin there indeed is in the 70s right now, although this quarter may have been, in terms of the trade-off between profitability and growth, we may have swung the pendulum a bit more on the profitability side on the bus vertical last quarter. I think if you look at the opportunity there, because only 19 to 20% of bus bookings get done online in the country today, and it's a significantly underpenetrated side of the travel market. So we believe that I think going and bringing more offline bus bookers online, even at the cost of letting go some of that contribution margin and pushing the pedal really on growth there, makes a lot more sense. And that's the strategy you will see us play out over the next few quarters.
Okay. Just wanted an update with regards to your gross transaction value. If you look at it from an FY24 basis, you were up, I think, over 35% on a year-on-year basis, or to over 10,000 odd crores. What are you anticipating in this fiscal? Can you provide us any kind of guidance? Would it be as much growth, or would it be probably tempered down?
See, I think the overall OTA market is slated to grow at around 18% over the next few years, as per the Frost & Sullivan report. We believe that we have the right to grow much faster than that in terms of GTV growth, right? If you look at last quarter, we grew around 27%, and I think we should be able to continue a growth that is way faster than the overall market, despite the air side in the overall market growing only 4.5% last quarter. We managed to grow that also quite nicely in 20s, right? So I think the GTV should continue growing at a significant double-digit sort of growth rate. I would not have any specific guidance around it, but I can say that flight and bus both should be key drivers there.
All right, take that point. I just wanted your thoughts on two things in particular. One, you had set aside 50 crore when you raised funds at the IPO for inorganic opportunities as well. So what's the update out there? Any talks which are underway, anything that we're likely to hear in the very near future? That's one. And second, you also very recently seeded hotels. So wanted to understand what your targets for the hotel business over the next couple of years are.
So I'll take the second one first. So on hotels, we are obviously one of the late entrants. We've entered only late last year, around December is when we launched the hotel OTA business. We think that there is a significant opportunity, especially on the budget hotel side, where we have a significant overlap in terms of user requirements. And we also see that there is underpenetration on this side of the market as well. Less than 30% of bookings in hotels get done online today, but a lot of the Ixigo users are actually coming and doing the first hotel booking online of their life. And I think that's the key opportunity to unlock there. How can we grow the market? And I think a lot of it will be around learnings. So this year will really be about learning what supply works and what sort of product will work there. And over time, we will talk more about hotels. But at this point, we are very satisfied. We are seeing very healthy double-digit month-on-month growth. And without going into specifics, we're satisfied with what we're doing on the hotel side. Maybe in a few more quarters, we'll start talking more about it. Coming to mergers and acquisitions, I think we're looking at obviously quite a few companies time to time. We keep meeting founders and we keep looking at interesting business models which can actually either add a new vertical to our line of business or strengthen one of our existing verticals. At this point, there's nothing specific that we can talk about, but like we said in the IPO prospectus, it's an area where the past two acquisitions have worked amazingly well for us, Confirmed Ticket and Abhibus, and therefore we'll not be shy of looking at more acquisitions.
Okay, all right. The size of the acquisition, just a quick one-word answer.
Like I said, there's nothing specific to announce here. So, yeah.
All right, Alok, we're going to let you go on that note. Thanks very much for joining in and speaking to us. We'll take a short break. On the other side, we have Zomato, which is in focus. Really the stock of the day. Fresh record highs for that one. Welcome back. Well, today in our special offering Value Plus, Mangalam is focusing on really the stock of the day, Zomato, which has been buzzing. What is fueling the stock higher? It's at a record high today. And how has the company's performance been, especially in Q1? Mangalam is here at the wall with more details.
Well, stock of the day and stock of the last couple of years. What's interesting is that Zomato has moved around 40 rupees in today's trading session to zoom to a record high. And it's a far way off from July 2022 when the stock itself was 40 rupees. So 278 was today's high on the stock itself. A massive 7 times move since its decline to a low of 40. What has actually done well for Zomato over the last few years? One, there has been improvement in food delivery and their operating metrics itself. Secondly, most importantly, the strong growth that we've seen in Blinkit along with operational improvement and the management guiding for further growth out there as well. Third, improvement in market share versus Swiggy over the last couple of years. We've had data telling you that Zomato has actually gained a lot more market share than Swiggy. And fourth, finally, they've been seeding new verticals of growth as well. So let's take a look at each of them in itself. First, improvement in the food delivery business. The benefit of operating leverage really kicking in. First quarter FY24, the food delivery EBITDA was close to around 181 crores, with platform fees being introduced and a lot of other cost-cutting measures that the company has taken with revenue growth. Food delivery EBITDA zoomed all the way up to close to around 300 plus crores. Blinkit as well. It's grown at a compounded rate of over 100% on a gross order value basis. And despite this expansion and the investment in the expansion, the EBITDA on Blinkit is actually just minus 3 crores as against, about 133 crores what it was same time last year. So that's a positive. And finally, we're talking about Blinkit taking market share away from e-commerce deliveries and products like tech gadgets, sports, etc. on the platforms too. With all of this, the cash on their books also has jumped by about 1,000 crores in the last 4 quarters. What this has done is that the company's had an annualized profitability of close to around 1,200 crores. And Blinkit itself is valued at 20 times more than what Zomato paid for it in 2022. So that really has been the growth driver. As Deepinder Goyal had earlier said that Blinkit would drive more value for shareholders in the next 10 years than Zomato. And now they've gone ahead and revised the guidance to 1,000 stores by March 2025 to 2,000 by 2026 with profitability as well. Additionally, now the street is very excited about the prospects in their going out business. The company says the use case in the going out business has increased to movies, sports ticketing, live performance, shopping, staycations, etc. And their new app, which is District, will cater to this going out business. A claim by the management suggests that going out will be the third largest B2C business emerging out of Zomato. Remember, the company has earlier confirmed being in talks with Paytm to buy their ticketing business. So this is something that the street will be eyeing, especially given the sort of rise that we've seen on Blinkit itself. And brokerages understandably have increased their estimates and targets on the stock. CLSA has increased their earnings estimates by 6 to 36%. And it really has been summed up well by Motilal Oswal, who says that Blinkit defies attempts for them to value the stock fairly, even as food delivery business is stable and medium-term visibility is strong. Zomato, a 7 times move here was the journey.
Okay, all right, Mangalam, thanks very much for that. Ironically, this stock was sitting at a fresh 52-week low same time last year, which was on the 3rd of August, which was at around 81 odd rupees. And just look at it today. If you had invested at those levels, you'd have made a return of around 323% at today's current market price. Well, we take a short break, but Manish Hathiramani of Deen Dayal Investments will be joining in with some trading strategies. Stay tuned. Welcome back. Well, we have Mangalam, who's still standing by the wall. This time he has an F&O update with him. Mangalam, over to you.
Well, the markets have seen a big cut all of today's trading session. The Nifty is down almost 225 points. We're down but not out, like we earlier pointed out as well, and that's because of the Nifty Bank still not falling as much. At the same time, if you look at the broader markets as well, like the mid-cap index is down 0.6%. The advanced decline charts come up for you. We'll see that those lines have narrowed. The distance between the green and the red lines have narrowed as well. One stock on our radar is HDFC Bank. The big boy is batting for the bulls on one side for the Nifty Bank. If you look at it, it's above the 20, 50, 100 and 200-day moving average. Now it's about 100 rupees away from its 52-week high hit in the earlier part of July itself. I'm keeping an eye out on a couple of levels on the Nifty. So the 24,800 call has been extremely active, as is the 25,000 call. Both of them tell you that levels closer to 25,000 may continue to face resistance, but we are facing support, a strong support coming in around 24,700, 24,750 as well, and that's largely because of the activity that we are seeing on the 24,800 put. And remember, a much important support comes in a little lower. We have the 20-day moving average on the Nifty at 24,567. One stock that I'm watching out for today is AB Capital, likely to enter F&O band given the open interest activity that we're seeing on this stock. But that's about the F&O space. We also have Manish Hathiramani of Deen Dayal Investments joining us now. Manish, you typically give us calls on the Nifty. I just wanted your thoughts on where the index is headed from here and what are the stocks that you're looking at.
Good afternoon, Eicher Mangalam. Well, 25,050 to be precise for me is a stiff resistance on the Nifty. It seems like a Herculean task for that to cross. If we can get past that, 25,500 should be the next possible target. On the flip side, 24,650 to 24,700 is a good support for the market. If we can respect that, the short-term rally remains intact. The break of that can take the Nifty down to 24,400 for starters. The same levels if I were to give for the Bank Nifty. The Nifty is seeing some support today only because Bank Nifty has been recovering from the lows. 51,700 is a resistance for this index, and if it can close above it, we should resume the short-term uptrend. I'm working on that note, therefore, with two buy calls because we haven't broken the Nifty as yet in terms of levels. The first one is on HDFC Bank for a target of 1720, stop loss of 1585. The stock has been in a long phase of consolidation with a downward bias. There was a stiff resistance at 1650, which has now been crossed. And the second buy is on GAIL India for a target of 250, stop loss of 230. The stock has been in an uptrend and now has a good support as well around the 230 levels. Risk reward is favorable, backed with good volumes.
Okay, all right. Well, on that note, Manish, we're going to let you go. Thanks very much for taking the time out and giving us those updates. Well, we'll take a short break. On the other side, we'll get chatting with the management of Sun Pharma on their Q1 performance. Welcome back. Well, Sun Pharma is in focus. They did have their conference call last night, so a couple of important takeaways. Currently, there is a motion seeking a preliminary injunction which has been filed in a US court to prevent the launch of Lexcelvi. which is basically their drug, which is for alopecia. The company is saying that they intend to rigorously oppose that particular motion. It will possibly maybe delay the launch of the drug in the US markets, according to analysts. The company cannot comment on when they'll be able to launch that drug now. Separately, they did mention that the US FDA is looking to re-audit the Halol plant, or they will ask the US FDA to re-audit the Halol plant, but they will only call them when they are 100% ready with the remediation. In fact, I did catch up with CS Muralidharan, who is the group CFO of Sun Pharma, began by asking him about the specialty business and the key drugs and their performance in the quarter. Listen into what they had to say.
So our key products in specialty business continue to do well. In this quarter, we saw good growth in Ilumya, Cequa, Winlevi, and Odomzo. However, the slight drop compared to Q4 was mainly on account of seasonality in one of the specialty products, Revlon, in the last 2 quarters. Our outlook on specialty business remains to be positive, and we expect the existing products will continue to grow. And there doesn't seem to be any concern for growth front.
Okay. So what is the run rate that we could expect on a quarterly basis for the specialty business?
We are not giving any guidance for any separate business segment. We have already said that we continue to focus on maintain the growth momentum in the global specialty business.
Okay. And how much would it probably inch up to as a percentage of your total revenues, considering it's around 17.7% of your total sales currently?
The last 3 to 4 years, we have almost moved from about 7.7 to 8% to about 15 to 16% levels. That's the level of momentum we had in the global share of specialty to consolidated revenues the last 4 to 5 years. So then you can extrapolate how we will perform in the going forward.
Okay. All right. Well, there is one particular piece of news. I know you mentioned that you all can't really comment on it in the conference call, but there is a preliminary injunction on your alopecia drug, Lexelvi. Can you just give us more details on it?
So we already said in the earnings call that we would not like to speculate further on the outcome of the litigation. A preliminary injunction has been sought in an attempt to prevent us from launching Lexelvi. We intend to rigorously oppose the motion. However, you will appreciate that it will be the court to decide. Our commitment is to launch the product.
Okay. So when were you expected to launch the product initially?
We were expecting to launch the product post-approval. However, we always need to factor a couple of months post-approval for other marketing-related preparation activities.
So there's an assumption that it's been delayed because of the preliminary injunction and you don't know till when?
We said we will be unable to comment further at this point of time when the matter is already in discussion in the courts.
Okay. Now, X of the specialty business, the US generics business was flat on a year-on-year basis. Why is that? What was the contribution of, say, Revlimid generic this quarter? What was price pressure like? And what is your guidance on both price pressure as well as the new launches?
The sales of lenalidomide in the US for Q1 FY25 was not large. Somewhat broadly in line with the sales in Q4 FY24. And we have maintained in the past that the generic lenalidomide sales tend to be episodic and fluctuates between quarter to quarter. So our overall US generic business, we continue to remain positive. As far as price is concerned, price pressure continues to be there, and it is quite product specific.
Okay, it's quite product specific. Overall, are you expecting a pickup in the US generic sales?
Our objective is to grow all of our businesses.
Okay, no guidance there. But margins, this quarter margins were quite strong. What is the similar run rate that we can expect in coming quarters for the margins?
So we are not giving any specific guidance on EBITDA margins. We will continue to invest in R&D to build a strong product portfolio, both in the specialty and generics. At the same time, keep our focus on profitability. And you have seen in the past that we have worked on improving our efficiencies and thereby deliver the resultant EBITDA margins.
Okay. Now your top line guidance is high single digit consolidated top line growth, which was given last quarter. Does that still stand going into the entire FY25?
Yeah, while in Q1 FY25, we have top line growth is 6.3%, but as mentioned in the call, our all businesses are well positioned to grow at this point of time, and we maintain our top line guidance of FY25 given earlier.
Okay. You're also, what is the plan on ramping up GLP-1 drugs? Because a lot of your peers are now looking at it quite competitively. What is Sun Pharma's plan?
So at this point of time, GLP product 1 is under the clinical trials is going on. So too early to comment in terms of the opportunity.
Would it be via partnership or would it be a standalone generic that you would enter as?
We will let the investors and other analyst community know in terms of a strategy. It could be market specific in terms of partnership, or few markets we may go ourselves also.
Okay. Now that Taro has become a private company, what is the consolidated cash on books for the consolidated entity?
The total consolidated at Sun Group level, we are having a net cash of $2.3 billion.
Okay. And integration is complete with Taro?
The prior transaction closed in late Q1 FY25. Currently, the position integration activities are going on, and we expect that we will be able to complete in the near term the integration work.
Okay. Dadra received a warning letter. What is the status of remediation and resolution there?
So we are working to address the issues at the site, and after completing the remediation, we will be presenting to FDA the site for re-inspection.
But that would probably take some time considering that you just received the warning letter.
We're working on it at this point of time. We have taken the FDA feedback very constructively and made commitments to address the concerns.
And Halol?
We're working in Halol also at this point of time, completing the remediation facilities, and as soon as we're ready, we will request the regulator for re-inspection.
Okay. Can we expect a re-inspection for both these facilities this calendar year?
It's very difficult to give any specific timelines at this point of time.
All right. Last question then, sir. Mohali plant, have you all resumed supplies from that facility entirely?
See, the supplies from Mohali has been somewhat flattish compared to the previous quarters. However, as we said earlier, we are gradually on the path to normalization of supplies.
But any pending issues from the plant?
So we currently, based on the last information from the regulator, we are working on the appropriate actions, what is required to be done in the site.
All right, that's the conversation that Ekta had with the management of Sun Pharma post their numbers. They're working on the Dadra plant remediation. We're unable to comment on the size of the opportunity of a couple of drugs as well, but we'll keep an eye out on this development as we go along. But as we move on, let's take a short break. And as we do that, here's something that we're thrilled to announce. It's called the College Connect program. It's under our ongoing season of HSBC presents CNBC TV18 Future Female Forward, the Women's Collective. Recognizing college students as leaders, opinion makers and change makers of tomorrow, this unique initiative encourages the youth to foster inclusive and diverse workplaces, drive gender parity and tackle societal and business challenges as well when they join the workforce. So we're kicking this off tomorrow at 3 p.m. from IIT Delhi with some of the biggest leaders and voices joining us. Stay tuned.
Welcome back. Well, let's focus on a couple of stocks which will be coming out with their Q1 numbers today as well as tomorrow. First, let's talk about today. We have Titan, which will be coming out. Well, Mangalam, what can we expect? We did have that Q1 update which came through.
Exactly. We had the Q1 update, and since the Q1 update, a lot has changed in the jewelry sector. The budget has happened, and as a result of which the stock has started to move higher as well. What do we know from the update is the jewelry domestic operations grew by about 8%. Higher gold prices, lower wedding days, weak sentiments impacted demand. and studded growth was moderately lower in comparison. What the street expects, improvement in outlook post excise duty cuts and ahead of festive season and wedding season too. So the street will be looking ahead rather than just the numbers this time around. We're looking at a 10% revenue growth on a standalone basis, 12,250 crores on the top line. EBITDA grows 8%, just shy of that 1,200 crore mark, implying that the margins could be just shy of that 10% mark as well. And the net profit largely flat for all the other verticals, watches, wearables, eye care, emerging business, CaratLane, all of that. We have it from the Q1 update. So what we'll be looking at are the operational performances out there. And for the jewelry business itself, the company has said in the past that they don't expect the jewelry margins to go beyond the 12% mark in the medium term.
Okay, and Britannia as well. It's a busy day for you.
It is a busy day. Hopefully, both of them come post markets and not during markets. So we'll keep an eye out on how that pans out. But Britannia, it's a good session, a good set that is expected. The stock is just about 4% away from its record high. There's improvement in demand environment. We had Kantar yesterday say that the biscuit category is actually growing a lot faster. 7 to 8% volume growth is expected, mildly offset by price cuts as well. So what does that mean for the overall revenue? 4.5% growth. It's just shy of that 4,200 crore mark on the top line. The EBITDA grows a tad faster. 12.5% jump out there would imply margins of 18.5%, 17.5% growth in EPS as well, or the net profit that is closer to 775 crores. Domestic volume growth between 7 to 8%. Watch out for the management commentary on demand and the production of their new products, as well as the launch of some of their new non-biscuit categories.
Okay, all right. So that's on Britannia and Zydus Wellness as well, which is flashing on your screen. So revenue up around 20% for that particular company, 841 odd crores, and the net profit is up around over 30% year on year as well. So doing well for Zydus. That stock up around 1.3%. It's the consumer arm of the Zydus pharmaceutical firm. So that's Zydus Wellness. But nonetheless, we have SBI, the largest bank in the country, which will be reporting its Q1 numbers tomorrow. Abhishek is here with the key expectations from the bank this time.
Well, Ekta, Street is factoring weak earnings momentum for SBI YOY and quarter-on-quarter, and this might be on account of the treasury income decline. So it may look like a one-off with respect to the earnings momentum. Take a look at the business momentum. Motilal Oswal estimates deposit growth to be lower than the system, that is about 10.6% YOY and about 1.8% sequentially. Again, for loan growth, Motilal Oswal estimates strong loan growth of 17% YOY and about 2.5% quarter-on-quarter. The net interest margin can come under pressure YOY but remains stable on a sequential basis. So Morgan Stanley is estimating a 12 basis point decline YOY in net interest margin and a 1 basis point increase on net interest margin on a sequential basis. OPEX will remain high, which can impact the operating profits. Slippages are expected to rise quarter-on-quarter, but this is more seasonal in nature given the fact that Q1 does see an increase in slippages from the agri portfolio of banking sector. So Morgan Stanley estimates slippage of 8,500 crore versus 3,964 crore that they had in the previous quarter. Recovery and upgrades will be lower as per Kotak Securities. Asset quality expected to remain stable. Again, Motilal Oswal estimates gross NPA ratio at 2.2% versus 2.2% in the previous quarter, and they expect net NPA ratio at 0.5% versus 0.6% in the previous quarter. So management commentary with respect to growth, unsecured loans, net interest margin trajectory outlook will be important to watch closely. Now, our poll suggests NII growth of 8.4% YOY and about 1.2% sequentially. We are working with a profit growth of just 1.5% YOY and a decline of 17.2% quarter-on-quarter, largely driven by the treasury portfolio. Back to you.
All right, Abhishek, thanks a lot for that. SBI will be the big one that we'll be watching out for over the weekend, and most likely the results from Titan and Britannia likely to be after markets as well. So all these will be reacting to numbers on Monday. Take a short break, come back on the other side. We have our commodities segment as always. Manisha Gupta joins in. With her is Kunal Shah of Nirmal Bang Commodities.
Welcome back, and joining us on the show now would be Kunal Shah. He's headed commodities at Nirmal Bang. But before that, we'll let you know on how the commodity prices really have been. If you look at the month of July, we've seen most of the commodity prices actually continue to decline. The crude oil prices have posted in a fourth week of decline. And for the month of July, we're down by 7.5% onto this one now. Similar has been the case with the industrial metals as well, where you have copper, aluminum, zinc, all declined by more than 10%. And with the kind of markets we're looking at right now, it is going to be about the US non-farm payroll data. Well, that comes in today in the evening. That would give you further direction for many of these markets. Kunal, hi, thank you for joining us. I'll start with metals first. And a weak June and an even weaker July. How is August now looking to you?
The weaker June, July, everything is because of China. There is no positive trigger coming from China when it comes to metals. It seems that the Chinese slowdown has been worsening in last 2 months, and there has been no concrete policy support by the central bank. So even though at a time when we saw 2 rate cuts in a span of 7 days, the market, the prices of commodity, the prices of real estate continue to went down. So I am of the very firm view that the fundamentals from the China perspective doesn't look very lucrative. But at the same time, we are at that cusp where we are on the verge of the start of rate cut cycle in the Western economies, and especially in the US and Europe and UK. So I believe that if prices decline by another 4-5%, some of the metals will be available at their cost curve. The fundamentals for the short term, because of the China, is not looking attractive. It may correct a bit from here, but I mean, I'm not expecting a flash crash. These are the opportunities. You buy things when things are really gloomy, and that's the case with the metal. So with the rate cut cycle about to start, the downside looks very limited, and fundamentals at this point are not at all lucrative, but all of these are priced in. So copper perhaps at 780, 775 is a good buy. Till then, we should wait.
Okay. Kunal, you said that 4 to 5% of decline in metals is a good time to start buying. Buying for what kind of rewards on the higher side?
We are not going to see that levels of 950 or 1,000 rupees by the end of the year. I'm not that bullish because the inventories are building up quite sharply. So you can expect from those levels 5 to 7%, 8% bounce back. That's it. But I'm not expecting any fireworks because we need China's stimulus, China coming up with a stimulus. That will be the trigger. How they are going to revive their sluggish real estate market, what are the steps they are taking, that will decide the fate of metals.
All right. So until we see a big bang one coming from China, the metals are not going to get their life back. How are you reading then the US non-farm payroll data today? And as you said, the next big thing to watch is going to be the US Fed meeting in the month of September. Has the data, has the rate cut already been factored in by the markets right now?
Okay, so I personally feel that rate cut is already priced in. Gold has in fact discounted the rate cut in the month of March, April only, when it tested $24.80. So rate cuts is no big thing. Rate cuts are coming. You see what has been happening. Japan has increased the rate. So it's a coordinated moves by all the central banks. Japan cannot print anymore after so much printing, and US, they are not able to service their interest also on their debt. So 75% of their total revenue, which they are getting from the tax collection, are going for just servicing the interest cost of the debt. So they have to reduce the rate. It's a no-brainer. So we are at the start of the rate cut cycle, and that is very bullish for gold and silver. All the economic data from US, interestingly, have come. 35% of the data later have been revised to the downward revisions. So the US economy is not that strong the way it seems. And that is why gold silver is my favorite pick. Gold is going to go up further.
I was coming to gold, Kunal, and that is my final question. So what is your sense on gold and silver? Because silver seems to be moving with the base metal prices, but gold seems to be standing tall by itself there. What kind of highs would you anticipate? If someone was to buy right now, also ensure to make use of the duty cut, where do you see the prices go now in the international markets and the Indian?
Okay, so I think duty cut, we've seen from $2,350 gold already at $2,500 right now. So Some of the effect of the duty cut is already been eroded. Gold looks very strong. All the reasons to remain long in gold, they continue to remain, apart from only one, that China is not buying gold from last 2 months, 3 months. That's not a big deal. If ETF starts buying gold, if there is a slowdown globally, gold is going to go up exponentially over a period of time. So my bet is gold is a must in your portfolio in current economic environment, when central bank, in spite of the higher inflation, in spite of the high debt, they are again going to go on the easy monetary policy. So we are entering into a absolutely uncharted territory. This has never happened in the history of financial market. That after printing so much, they are again starting their monetary easing cycle. And what impact that will have on inflation, we don't know. The likelihood of inflation again going up after cutting the rates is very high. So I personally believe this is the time to remain in gold. De-dollarization process is taking place. BRICS economies are forming, adding new members, and all of them are planning to float currency backed by gold. So gold is not...
then. Gold is a no-brainer. We get that. Gold is a no-brainer, Ekta.
Absolutely. It's a no-brainer, and maybe you should just accumulate gold before the prices rise even further, which is what Kunal is probably indicating at this point. Thanks, Manisha, as well as Kunal, for taking us through that conversation. But let me end this show with some good news. The numbers are out, and it is final. India watched Budget 2024 with CNBC TV18. CNBC TV18's dominance continues as it knocks out the competition on Budget Day. CNBC TV18 is the clear number one with 91.2% viewership during Budget Day. Yes, in fact, continuing its 25 years of leadership, CNBC TV18 won another gold on Budget Day. Thank you, viewers, for your consistent patronage, trust, and continued support.